Hey everyone, Jeremy Coach Emilio here with Lifetime Home Loans. Just wanted to talk about buying a home now versus waiting until next year when rates are lower and buying a home then. And wanted to share with you some numbers today as I kind of compared those two scenarios. Obviously, we're all having lots of discussions with prospective home buyers right now about whether or not they should buy now or wait for rates to go down and then buy later. And we all know that rates are going to go up once, or rates are going to go down. And when they do, home prices are going to go up. And so what I did is put together some numbers today that kind of illustrate how those two scenarios compare. So we're going to look at two scenarios today. One is where someone buys a home now and then refinances that home next year when rates are lower. And scenario B is going to be someone who just waits until next year and buys a home then. And the numbers are pretty interesting. Here's what I came up with. So someone who buys a home now, let's say they buy a $500,000 home in the next couple months, they put 5% down, they finance 475, and they get a mortgage at 6.75%. And they make payments for a year, and after a year, they're going to owe a little under $470,000. And at that point, next spring, let's assume they can refinance to 5.75%. And they add in a little bit of money for closing costs. At that point, their new mortgage payment next spring is going to be just over $3,200. The second scenario is someone who wants to wait. They wait until the next spring and then they buy the home then. Now, let's assume the home values go up, let's say 6%. And so that $500,000 home today costs $530,000 next spring. They're putting 5% down at that point, and they're borrowing 503 grand. And at that point, they get a 5.75% interest rate. And at that point, if they buy the home next year, their payment is going to be $3,450. So you can see when you compare these, there's some pretty stark differences. The client that buys the home now gets in, they owe less money a year from now versus the client that buys the home a year from now. They have significantly more equity because they bought the home now as opposed to a year from now. And once they refinance next year, even taking into account a few grand in closing costs on the refinance, their payment is over $200 less than it would be had they waited until next year to buy the home. They've basically got 10% equity instead of 5% equity. And that makes a big difference as well in terms of eliminating PMI, private mortgage insurance, from the monthly payment eventually. So you can see that there's some big differences in terms of when people decide to pull the trigger on buying a home. Obviously, each client's situation is unique and different and depends on the household and their goals and their budget. And obviously we understand all that. But as we go over some of these numbers, sometimes it helps people to understand the power of amortization and home appreciation. And when they factor everything in, it gets some people more excited about buying now versus later. So hope this has been beneficial to you and that it can be beneficial to you as you go about building your business. And if you have questions on this, don't hesitate to connect with one of the loan officers on our Lifetime Home Loans team, and we can drill down on this a little bit more for you. Thank you. Have a great week.